Good morning, trader friends. Welcome to the show. It's Tuesday, 10th of February, and I'm joined by Axel Rudolph. Give it up for Axel here, who is with us on a day when the markets are, looking at the DAX, quite happy.
Not just the DAX, but yeah, it's pretty impressive, isn't it? I mean,
after the week that we've had.
Yeah. I mean, the DAX, we can talk about it in a minute and look at a chart, but yes, it's looking pretty positive. We've also had the Nikkei 225 making record highs after these elections.
Yeah.
I mean, quite a feat, isn't it, for the Japanese Prime Minister to pull this off? I mean, technically speaking, it's not quite the same as what we're seeing in the UK at the moment.
No. We need a Sanae out there. Anyone want to rise to the challenge? But yeah, it's incredible. I mean, Japanese stocks, if anyone said this 5 years ago, you kind of laugh at them in the face. But these stimulus expectations too, I mean, crazy stuff for Japan, because I was talking to Chris yesterday and I said with Japan, normally nothing happens when the government talks about stimulus, because the Japanese just take it and save it.
Yeah.
They don't spend it. It's incredible. But look at where we're at right now. Just having a look at sentiment there, because Axe and I are going to talk about changing sentiment as well. We're seeing a bit of stabilization there after that whole AI bubble popping mood music. But we seem to be in sort of like a stable, steady phase here. Let's have a closer look at the FTSE constituents there. There's unexpected error. Let's have a look across. You might have to use Axel's charts for now.
Okay.
As I log back in.
So shall I talk about the DAX in the meantime? And let's just put the glasses back on again. So yeah, why do I like the DAX? Because it's been lagging, let's be honest, for the last few weeks really. And Chris unfortunately got stopped out on his long trade from the trade of the week from the week before, which looked really promising at first. But he just got stopped out within 3 points. I mean, it's really bad luck, but it happens. But now we are breaking through that resistance line going back to January of this year. And that's quite encouraging for the DAX. It may actually go higher and catch up with the others. But if you look at Japan, I mean, the Nikkei is really the interesting one, as we can see here. That's the election here, and clearly very bullish, back up again, nearly 3% overnight. And yes, who would have thought? But then again, we had the same for the FTSE 100, didn't we? I mean, the FTSE basically looking like it was going to go nowhere for decades, and then suddenly last year and this year it's just powering ahead and having double-digit gains. What at least last year we did nearly 19% up.
Yeah, and it's still nicely well above that 10,000 figure. Right, my charts are working now. Let's have a look at the movers there on the FTSE as we were talking about it. Croda International, top of the pops there, up 2.8%. WPP also up 2%. Good morning to all of you that are joining in right now. Good to see and hear many of you. Thank you so much for sending in all those questions in the previous week. We will get to them. Pearson also up 1.6%. Looking like quite across the board here, this uplift.
Yes, I mean, as you say, we've got house builders in there, Barrett's and Taylor Wimpey, which is interesting. Persimmon, I can never pronounce that one. But also Vodafone, interestingly enough, doing really well so far, and then some banks. But yes, it's a mixed bunch here. Yeah, I mean, not really anything I can pick out. Or can you?
We had Korean shares halted at the open, but let's, whilst we've got the directors keeping an eye on that, we're going to move over to the losers list there.
So here it's more interesting because we've got obviously BP coming off a little bit with the oil price. And then miners, Fresnillo, Antofagasta, those were the ones which were really powering this rally at the beginning of the year, but at the moment we're consolidating a bit. And we're seeing that in the US as well. I mean, yesterday we saw technology and software stocks coming back after this Oracle beat, and basically Oracle nearly up 10%.
Yeah.
That helped the whole software index also rise, I think, by about nearly 3%. And we're rotating out of defensive stocks back into tech.
I know.
Same seems to be happening here.
Yeah, I feel like we've been in this space many times before. Each time when we think that perhaps, a broader more sustained diversification or rotation is happening, it just switches back, doesn't it? Yeah, it's a really interesting time to be in the markets. BP also down that amount because of the buyback suspension. We've got IAG down more than 1%. Those of you that followed IAG like I did, I sold all of my IAG just after Christmas, and so I no longer have a position in that stock because I think the gains have been had for now. EasyJet also down 0.75% there. Right, just looking at a fair few movers today. Michelin, let's have a look at that. That is down almost 1.8%. It was down almost 2% earlier, sliding to the bottom of the CAC after traders cited Goodyear's weak results. Let's have a look at Kering. Do you ever buy any luxury items from Kering, Axel?
I don't think I do.
As presents? You look like the kind of man who has got great taste in presents.
To be honest, I don't even know which luxury brands they own.
Gucci.
No,
one of the big ones. It's not Gucci.
I'm more often an Hermes now.
See, I told you. I can tell class when I see it. He's an Hermes. It used to be said with all luxury analysts that if you buy Hermes or you receive Hermes, you have arrived in life, people.
Have you?
Yes. There you go. You know how they achieve those very expensive prices for their scarves?
Not just for their scarves.
Yeah, for everything, but particularly.
Tell me about the scarves.
So I went because for my sins, to understand luxury stocks, you are invited to the London Fashion Week, Milan Fashion Week. Clearly not fashion orientated, as you can tell, but I do like luxury stocks. So they invited me to go and have a look at the scarf printing at the Hermes stand. After 20 or 30, prints, they break the mold. And
yeah, I'm not surprised.
Yes, right in front of you, they break the mold, so a similar one can never be made again. And so that's why they can charge, 5,000, 6,000, whatever it is, and the price doesn't go down.
Same for their Birkin bags. I mean, if you wanted one, you need to have spent a certain amount of money with Hermes before you can even put your name on the list to be able to buy a handbag. So yeah.
Yes, that Birkin bag.
But it works, doesn't it? People want them. I mean, plus they're very beautiful, aren't they? I mean, if you look at the scarves, etc.
Yeah. Birkin bag, also infamous and linked with the Najib issue /1MDB, but that's a different story for another day. Standard Chartered also down 2%. Let's have a look at that. Standard Chartered.
I mean, that's I think
down
to do
now.
Sort of with what happened with
CFO.
Yeah. And I think all the banks in the UK are actually coming off a bit because of Evelyn Partners being bought yesterday by NatWest, the biggest merger they've had since they were bought out in 2000. Well, saved by the taxpayer like us in 2008, £2.9 billion. And investors were thinking that maybe that merger might have a negative impact on earnings, and therefore I think we saw a pretty sharp 13% drop in the NatWest share price from its high just last week. And Barclays was also dragged down by about 8 or 9% from that high. So I think all of these banking stocks in the UK are currently suffering a bit from that.
The house builders, as you rightly pointed out just now, also having a down day. If we look at the FTSE there, up day, Taylor Wimpey is up more than 2%. We had Persimmon up more than 2%, and Bellway as well up 2 points. Where is Bellway? Because it had results, I believe I saw on my way in. Bellway, there we are. Up 4% now. They were up 2% earlier. There we are.
I mean, that's interesting because house builders of the last year have really underperformed the FTSE 100. So it'll be interesting to see whether this year we can see a reversal of that trend and house builders actually rise. So it'll be interesting. What is also fascinating is that this is happening at a time when we have political turmoil in the UK with our Prime Minister.
Dear Prime Minister. Have you seen that video that is AI generated? And it's a take on Mandy, the song. And Keir Starmer's playing this grand piano.
I haven't.
And Mendelssohn appears in a long red operatic dress as Mandy. It's quite something. Thank you, friends, who those of you that sent me that video. I cannot unsee unsee this video. Speaking of which, I mean, let's have a quick look across to FX right now, and it looks like cable is down ever so slightly. Did you expect it perhaps to have more of a downward move, given what we've seen on the political front, Axel?
I mean, yesterday I was expecting a downward move, and it didn't materialize. I mean, if you look at my chart, you can see here that we are instead actually retesting the highs from just last week. Sorry, this is a monthly chart. I was wondering why it looked different to what I thought. But yeah, you can see here we're sort of getting back up again and testing the highs from last week, even though yesterday you would have expected cable to come down. But I think that's more a dollar weakness story than a strength story for the UK currency.
That's right, because the dollar fell to some near 2-week lows in the previous session against the euro and also against the franc. You know, a lot of eyes now on the dollar as markets wait on what Wash is going to bring. I have said that name right, haven't I? Wash.
So, yeah.
Kevin Wash.
So here we can see the dollar, the dollar index, dollar basket, and yeah, clearly not liking what it's hearing so far. Also, what will be interesting to see is the delayed non-farm payrolls data, which we were expecting last Friday, but then because of the government shutdown, they couldn't finish them in time. But we'll have those, I believe, today, no?
I think so. If I mean, we've been waiting for it, haven't we?
Yeah.
Hopefully today. So let's have a look at the commodities, shall we? Because gold is slightly lower today, but really not by much. I mean, it seems to have stabilized a bit. It's still above that 5,000 number there. And we also have silver coming down a bit, but it was up quite a fair amount yesterday. I think it was up 2.5% at one point. Same thing for palladium and also platinum there, and copper as well to some extent. Boy, they've seen so much volatility in the last week and a half. I was just joking with an ex-COMEX mate of mine that, you know, forget crypto. I mean, silver, the volatility we've seen recently is enough to, you know, give someone slight murmurs.
Well, we've never seen such volatility before, until sort of, if you go back to the 1970s maybe, but yes.
Yes, he lost all his hair then. And that is Rick Bensignor. For those of you that seen his interview, yes, when I knew Rick when I was working in New York, he had a full head of hair. He also had then his first wife, but if you watch the video, you can find out how he had cut his teeth during the first crash, and pretty much thought he'd lost the house and thought he was going to have to go back and tell his wife and new baby that. But a turn of events in the pits changed his fortunes. So I'm not going to give the whole story away, because if you watch that, you'll find out what happened. Also, copper is down as well, and nat gas. I know some of you trade nat gas. They're also down 1%, and oil, WTI and Brent also easing a bit there. Axel, I know that a few weeks ago you said that you still see oil as a short. Is that still the case?
Probably not, because quite honestly, I've been wrong on this one. I mean, the rally we've seen, as you can see on my chart here, has been quite substantial. And what's interesting at the moment is we can see a triangle forming over the last week or so. And if we break out of this to the upside, then we may well head towards the $70 area. If, however, we are to break down to the downside, and we are literally at the end of the apex of this triangle, so maybe the pattern itself won't be valid anymore, because usually you want to see a breakout in the first 2/3 of an apex, of a triangle, not wait for the actual last third. But basically, if you look at the trend, if you go back to the early January lows, the trend is your friend and it's been pointing higher. We've had a series of higher highs, higher lows. So as long as we stay above the low from Tuesday, the 3rd of February, which was made at $60.93, it's still bullish for me. And the odds are greater that we might go back up again and come off.
Nice, nice, nice. I love it when you draw when you're on with us, because I have been looking at the MDAX UCITS ETF. Let's see if we can get it up here. And this is, oh, maybe we don't have it on the IG platform, or my platform is currently having slight issues. But just to let you know, some of the constituents in the MDAX, this is the MDAX UCITS ETF. It has Deutsche Lufthansa, Knorr-Bremse, Hochtief, another name that I like, and Talanx, Carl Zeiss as well. So a lot of defensive names that I really like there, and it's all bound into this ETF. For those of you that don't know Talanx, this is a German multinational financial services group. Insurance, reinsurance, asset management forms the pillars of its business, and it has a strong focus on B2B clients as well. The other one that is, you can find this on the platform by typing Flatex. This is Flatex DeGero, which Joachim Clement was on with me talking about this. And as you can see here, this is also one that I have a position on. It's moving up nicely. As long as it's above the 20 and the 50 EMA, I am pretty happy there. What do you think of that chart, Axel?
Well, it's looking a little bit toppish short term, but in terms of the medium term trend is still bullish. So I would probably place a stop, a take profit stop if I were long, not below the first low from 2 days ago, but that one exactly, that low, the previous relative low. And as long as you stay there, the trend is your friend, in my opinion, because you can still see him, and there's an uptrend there very clearly. So don't get scared by sort of short-term retracements against the trend. They're totally normal. They're part of trading. What you want to do is catch the medium-term movements if you want to keep a position, and that's why you shouldn't just get out on emotional trading. You need to make sure you're sort of staying calm and just doing it rationally.
Exactly. You don't want to be breaking out in sweat. You don't want to be, praying for the price movement to change. The moment you do that, you know that you've got emotions involved. That's why we talk about swing low ones, swing low twos, and understanding ATRs and making sure your risk management reflects your trading strategy. Right, let's have a look at the day ahead, shall we? What's your day looking like, Axel?
I might write something about the UK house builders, because I think we just saw there were quite a few of them in positive territory, so quite interesting. So I might have a look at those, and then we'll see what happens this afternoon with the US data and with non-farm payrolls, which might have been leaked yesterday by somebody in the Trump administration, whether employment data comes in weaker than expected or not.
Let's have a look at some of these key areas here. We've also got a quick look at Ford, potentially market there watching for its guidance outlook. Let's have a look at what happened overnight as well. Were you up when Novo Nordisk, this was all happening, suing HIMSS over the weight loss pill?
No, I wasn't. Better things to do.
I was also watching catch up from my cousins in the US, sending me videos of from the Super Bowl, and they were laughing about how all the adverts, if you watched it, kind of summarized the US economy, and it was an obsession with weight loss and gambling to a certain extent, because there were adverts from Coinbase. Also, retail leadership changes there. We got Kroger naming a new CEO there, for those of you that trade retail names. And Apollo Global also beat the street in terms of its Q4 profit expectations. Oracle, you wanted to talk about Oracle?
Yes, I mean, Oracle, as I said, nearly up 10%. Let me just get the chart up here. Very interesting stock, which basically helped the whole software sector rise about sort of by 3% or so. But we can clearly see that Oracle, up to this point, hasn't had a good run. I mean, look at how it's come off from its highs in September of last year. I mean, that's quite a drop, isn't it?
That is a Do a quick measure tool. How many percent is that? That is impressive.
Can you remind me where I can get the measure tool on?
Oh, so it's the top and near the daily. There you go. You see the pen below daily. It has a there we are. Yeah, where the pen is, and I think there is a measurement, almost like a ruler. If you click, yes, there you go. If you go down, there might be a ruler somewhere that says measure tool.
There we go. You can just see that I don't use the platform for my own trading because we're not allowed to, unfortunately.
I know.
But yeah, so
plenty of tools out there, though.
52% from that high.
Wow.
Halving.
That's crazy.
Its value. That's absolutely mad. So yeah, yes, it went up 10%, but again, look at the chart. Fine, it may be a bottom, but it could just be a bounce like we saw before. We see bounces and then the trend continues, and then we see a bounce and then the trend continues, and so forth. So, unless you break some trend lines or you sort of ideally break a trend line and close above a last relative high. So that's what I do with my trading. So if I go against the trend, which by the way, most of the time I don't do, I rather swim with the tide than against it. But if I sometimes with some strategies want to go counter trend wise, what I want to see is a break of a resistance line like this one here. So we would have to rise above this line. And then I go to the left of my chart to see where is the last reaction high. And that was the high from Monday of last week on the 2nd of February. So I want to see a rise above that downtrend line and that high here for me to then confirm that it might be potentially a bottom. That's how I do it.
Do you like closing, like a firm close above?
Yes.
Daily
Intraday, do not make that mistake. A lot of people trade what they think the pattern will look like, for example, on candlesticks, whilst the candle is still forming. Don't do that because it could turn into anything. A bearish engulfing pattern could turn into a doji or even a bullish pattern. Who knows?
Yeah.
So you're waiting for the pattern to form. That means on candlesticks, which are daily patterns, you wait for the day to close. So most cases, the close would be New York, 5 o'clock. That's what seems to be what people look at, for example, for currencies, because they trade 24 hours. That's sort of the setup. But what you also do is then if you have 2 or 3 day patterns, you would wait for those to form. So a lot of people are jumping the gun. You need to wait for the pattern to actually be confirmed by a next pattern the next day or next hour or whatever.
That's it. No confirmation, no celebration. I love it when Axel's here because we talk about charts. So in Chinese trading terms and also used very much in things like mahjong, we have a term called tan, which means I'm waiting. I'm waiting for confirmation. Tan is the word. And I am using tan for Amazon. So those of you watching Amazon with me, or Amazon if you like, last night, lots of people going, is it time to jump in? Is it time to jump in? Well, I turned on my laptop overnight and I'm going to draw a line here for you. Can you see the 2 circles there? So I am not interested, right? Until we have a daily close above that area of interest over there that were last seen in October and also August 2025 there. So I'm just waiting here until we get to that point. Then I will be interested in this chart. There are lots of ways you can send yourself alerts on the IG platform. I highly recommend that you do that. And it's on the right-hand corner of your screen. You can press alert there and send yourself a message if you like. There's nothing stopping you using post-it notes, right? I have post-it notes around the house. It drives my family crazy. And it just gives you that ability. I also like writing on my stocks on the watch list to remind me of what I am waiting for. What do you think of that Amazon chart? Because most people would have seen that big dip there and thought, oh, gotta get in because, FOMO takes over.
Well, I wouldn't touch it with a barge pole because if it comes off that quickly, if you look at previous ones, the one on the left of your chart, you can see it came off, went down another 3 days, and then it took several weeks to go back up to the same high, and then it came off again. So even if we do see a sort of reversal, if you want to trade it, fine. You could have a move up towards 22,000 or something like that. But to be a long-term investor here, to me that chart doesn't look that bullish anymore because we've now fallen through these lows from August of last year and also the lows from October. That's not exactly bullish. Plus the fact that the bounce has actually failed last week at those lows, which are now resistance, is also not encouraging. But that's just me. I mean, if you're a fundamental investor and you think, over the next 10 years, Amazon's going to go up, it might be a different story. But even then, you might get a better entry level because usually when you get a big move down like that, it could be the last move. Having said that, and this is the caveat
There's
here,
a big but.
it could be the end of an ABC correction from the absolute high we saw in November of last year, because you've got a leg down, leg back up again, leg down, so a zigzag. And the distance that we've seen now from the drop in February compared to the distance we saw from November down to the lows in December, I believe, is similar. So perhaps this is the end of the correction. But I want to see more constructive price action before getting back in again.
Me too. That's why I'm kind of waiting. Also, as you see here, if this doesn't come above, this is why I'm not interested, because it just means that the next leg down could be levels. If you go left on the chart, look at this. This is painful. I mean,
and we've got a gap there, so we might close that gap. I mean, quite often when there's momentum, there is a reason why there is momentum. In this case, obviously fundamental. And then it doesn't just stop with one movement. You can get a counter trend move, and then you get another leg lower usually. So from that point of view, again, I'd be a bit careful here.
Right, and so on that note, some other things coming up. I mentioned earlier, we've got Ford, also the Coca-Cola is another one to watch out for. Strong zero sugar beverage demand is expected in North America, and also it's expected to say that there's been strong international demand for its trademark Coca-Cola. You a Coca-Cola kind of guy, Axel?
I don't drink it very often because it's just pure sugar.
Yeah, I don't drink it unless I have a hangover, and then it has to be like the original. None of the quirky, crazy cherry Coke, Diet Coke, whatever. It has to be the real thing.
But I do like the chart, and you see, I'd rather buy something like this than Amazon. And look at it. I mean, a lot of people a few weeks ago said, no, it can't go any higher.
Yeah.
I'm selling into this. No, it's going to top out here. No, it's going to top out here. No, it's going to top out now. Well, look at it. It just keeps on rising. Plus, here we've had that pattern I just mentioned, this ABC correction. So we had an up move into the highs of November, come back down again. That's the A leg, B leg, C leg. So you can see this distance from there to there is similar to that one there.
And the CISO
is And then you get a trend line break, and then you get a close above the previous relative high, and then you have a continuation of the uptrend. This sort of thing happens all over again, all kinds of time frames. And these sort of setups I like to trade.
I like that. I also like the fact that there's so many green bars there, right?
Yeah,
Let's have a look at the weekly.
I mean, if we look at the weekly, you can see, we're breaking out here again above previous resistance. That's really bullish. A big candle to the upside. That is bullish. And if you go to the monthly, we are trading all-time highs. I mean, this is healthy.
Nice.
Do not sell into something that's trading at all-time highs. There is momentum behind this stock. There's a reason why there's momentum to the upside, and it's more likely to continue than not.
And on that fizzy note, we bid you guys adieu. Good hunting, all of you. Let us know what you are hunting or what you are done, what you're waiting for, and the setups as well. We'd love to know. Hit the like and subscribe button. Also, make sure you share this with your friends, because the more sharing, the more Axel and I can bring all this good stuff to you. So have a great day ahead. You too, Axel. And we'll get you Axel's latest write-ups are both on the chat below and also on Discord for those of you who are watching from there.